Yo, what's going on, everyone? Back with another Bitcoin Elliott Wave technical analysis update. Today, we're going to be focusing a little bit more on the shorter time frames since the markets are drier than a pizza crust. Bitcoin is still working quite correctively in nature, meaning that we are trying to assume the proper mode of pattern if we are assuming that our wave 4 has terminated on the macro like we have here in the green. If that is the case, we are still trying to find a wave 1 of the primary degree to complete in the yellow to the upside. And since wave 1s are actionary or emotive waves comprised of 5-wave structures, the only real way we can find a structure is either by a clean 5-wave move to the upside, which we don't really have, or a possible leading diagonal variation that we may be creating, but a little bit too early to discuss since we don't have all of the subwaves being created. Those will be the only two ways we can assume a possible beginning structure. So if you don't have a clean 5-wave structure to the upside and it is more corrective, the only mode of correction or pattern left is going to be a possible leading diagonal. Now the problem here is that due to the low volume, it is still looking quite corrective in nature. The only real possibility of a continuation to the upside, I would say, is to continue creating corrective patterns to eventually finish off a possible leading diagonal, as that would be pretty much the only way to create a wave 1. So otherwise, we are going to have to resort to a more bearish option that might potentially show us one more low to the downside, which I will also discuss breaching these lows. So for this leading diagonal variation, the pattern is straightforward. I've also drawn this out for you guys. For those that are kind of new to the Elliott Wave Theory, we could be looking at two different variations of the leading diagonal. We're looking for either a 5-3-5-3-5 structure or a 3-3-3-3 structure, where the internal structures or the internal subwaves are either going to be comprised of 5 waves, 3 waves, 5 waves, 3 waves, 5 waves, respectively, or all threes. And right now, since the move off the lows looks like some series of threes, we're inclined to follow the 3-3-3-3 route. This means that we're expecting a series of simple zigzags, or at least in the family of zigzags that also could be WXYs. So when it comes to the rules, very simple. Wave 1 can be as long or short as necessary with no specific relationship to other waves. So wave 1 can be as long as it wants. Really doesn't matter because it doesn't have any relationship to wave 3s or 5s. That is the new updated rules. Don't ask me why. That is just how they created the rules. And remember, pause the video if needed to distinguish between the two types of patterns and why we're working in this, because right here off the lows, it does look like a 3-wave move. Now, it's still early to definitively call this a diagonal, however. We usually need to see confirmation around the 4th wave. That is usually an observation to be more confident, and we don't have that yet. So this is something that we are still monitoring. This would be pretty much the only bullish continuation pattern for the time being until we get more data of actual corrective waves to complete. Even with our subwave 3, we might be running the risk of working in a different corrective pattern. So that is the bullish scenario that remains for the time being. We originally anticipated the possibility of a 1-2-1-2 being created. It's still valid. We can still be working within a WXY, having this as a 1-2 and a 1-2. But again, it is starting to look a bit larger in time and also in size against this previous parent degree wave 1-2. Now, it isn't invalid. That's something that you have to keep in mind. So the validity is still there. If we were to impulse out of here, that would pretty much be the only resorted route to go, but we're working with probabilities here, ladies and gentlemen. Again, it is too early to call for any of these because of the volume is so dry. So we can sit here all day and be creative as much as we want, but right now we're just trying to figure out what is the best way to narrow down the scenarios with the low volume as the key factor. But that also being said, it is also too early to call for a bearish move that we've also discussed in our previous video. So let's take a look into that as well. Now, we have the possibility of having an incomplete WXY to the downside. Now, remember, we originally said that this is the completion where we terminate wave 4 over here, and that move alone could be where the wave 4 has completed. However, this can also be alternatively be seen as an impulse wave. Now, that is the tricky part because we can see this as 3-wave moves as the overall structure looks completed. Otherwise, we're going to have to be saying that we're going to be working for a lower wave Y. And the only way I can really complete that is a possible A, B, because I have said, remember, this is a completed ABC to the upside. The real evidence is that we did fill that CME gap and we're finding rejection off of these highs over here. So what that means is we do have a similar problem here, either as this being created as a 5-wave move, just like for that leading diagonal we were talking about, a 5-wave move to the upside that wasn't happening. And we also saw a possible three-wave move off the lows being the part of the beginning of a diagonal. We also have the same problem here with the possibility of creating an ending diagonal for the C wave to the downside. So we have a balance of approaches here, ladies and gentlemen. If we're seeing lower levels, the only real way I can see this is possibly another diagonal being created to the downside. That's still too early to call for. So we do have that dilemma here. The reason why is if you were originally anticipating seeing this for a impulse move off of to the lows, we got a problem here because this move here looks like a three-wave move. This move here looks like a three-wave move. So obviously this is part of a possible double correction type pattern that where we just come down not as far, and this is another problem in itself. We really want to be extending this wave as much as we can to be creating that first possible move off of the lows here and then having another move off of the lows here. So that could be another problem in itself for this diagonal idea or ending diagonal variation for that matter, but that would be the only way that I would personally see it if we're working with low volume in mind and we have a lot of these corrective structures and overlaps within this current price action. That means that we would be moving back and forth until we actually eventually breach this low, and that could be taking us another few months just to complete this move alone. And that is too early to call for right now as well, just as we are also calling a bit too early for that leading diagonal. So that leaves us to that possible option. Now, we do have the possibility of having even the C wave in itself as the entire diagonal, where we're seeing this as the wave A or 1, 2, 3, 4, 5, where it works a little bit in similar fashion, where we can have this as a C wave. But again, that is quite early in itself. I don't like this idea. I'd rather just say that the C wave alone of this wave Y is going to be the way we're going to be doing it, where we breach the low just by a little bit, but it will happen in one corrective wave of this overlapping structure of that ending diagonal that eventually finishes off this actionary wave of the wave C. So that means that the low will be breached only once, just like we've been breaching these lows just once as well. So that would be my way of interpreting it, instead of just having this go back and forth and large back and forth and creating a larger diagonal. I don't think that would be the possibility. Now, I'm just working on my personal way of approaching the markets. There are so many ways that we can be seeing how a corrective pattern could be ending. But for now, again, like I've said, I think the best way that we can be kind of narrow down these scenarios is just that saying that we have completed the larger macro wave 4. That is going to be my conviction still going forward until we actually breach these lows. And even if we correct down here, I'm probably going to still think that we're going to be working in that diagonal, even if that's the bearish scenario where we breach that low one more time. That still leads us to higher levels no matter what. So for now, nothing is too worrisome in terms of the price action. We're just kind of working in a low volume. Remember, I said the volume is drier than a pizza crust at this current time of recording. This move off the lows was corrective. This move here is also looking corrective in itself. So with that current data given, we might as well just assume that we're also working in a possible leading diagonal. So that is where we have to balance the weight between both of the scenarios. If we're seeing a diagonal to the downside or a diagonal to the upside, those two ways are going to be the way I am currently seeing the markets. So we can also alternatively even say, you know, again, I said we can be as creative as we want. We could alternatively even say that a B wave is also continuing, where this could be working in a W, this could be an X, and this could be a Y going into that as well. But again, I don't want to see the price action going above even the 80% or the 90%, and that in itself, I'm sure a lot of Elliottians are going to be seeing this as a possible sideways structure once again, and I don't think that is going to be likely the case. As I've said, either completed wave 4 of the macro is now in, or we have one move to the downside where we just do that right now, and then we have that one more low being created where we don't create a higher B wave of any sort. That is a possibility, but again, a lower in probability, because I don't want to be saying that this is some kind of larger sideways structure. So that's the current situation that I'm looking at. To summarize it real quickly, WXY is completed with the idea of a diagonal coming into play here, or a larger WXY that has not been completed, where wave Y is still being worked upon with a C wave with the possible diagonal being going into that one more possible low, and then we're off of here. And then those another major Fibonacci level of the 50% is going to be in that area of interest as well. As we did get off that 38.2% level just by a hair, it didn't hit it, but just by a hair, you might as well say that 38.2% has terminated, and that would make it complete for a possible macro wave 4 of the larger degree to go for that wave 5 that we're looking for. So hopefully that was helpful, ladies and gentlemen. I'll see you guys in the next video. Thank you very much. Have a fantastic rest of the week. Bye-bye.